What was I thinking? Honestly, I look back at my first few weeks of investing and I just cringe. I was throwing money at random stocks on Trading212 thinking I was destined to make money. Spoiler alert, I wasn't. What's up, Effortless investors, and welcome back to the channel. In today's video, I'm pulling back the curtain on my very first investments. The ones that made me realize just how little I knew about the stock market. If you've ever made a bad trade and you fancy laughing along at my misfortune, then this video's for you. Now, it goes without saying, and this video will emphasize it, I am not a financial advisor, just a 9-to-5 guy contributing steadily to my realistic investing portfolio. All the information in this video is for informational purposes only. When I first downloaded Trading212, I thought I was being smart. I binge watched a few YouTube videos, read some community posts, and figured, yeah, I've got this investing thing nailed down. Hindsight, being the wonderful thing that it is, proves that to be so far from the truth. It's actually laughable. So grab a cuppa, because we're about to look back at my first ever investments. 6 weeks of chaos, confusion, and some hilarious decisions. So first up, my very first transaction was BP. But before you give me any credit, that was just the free share I got for signing up. Now, instead of holding it, I immediately sold it. A classic move. And then, for some reason, I decided to buy exactly £3 worth of Rolls Royce and £2.52 worth of the Vanguard S&P 500 tracker, which are not bad picks, just weirdly specific. I can only assume I had some kind of master plan brewing. So day one of being an investor, I nailed it. Day two rolls around, and I'm feeling confident. Clearly too confident, because I went straight to the trending stocks page and bought a bit of everything. Looking back, none of them were truly terrible choices, but it's obvious I was just buying whatever was popular. Not exactly the long-term strategy I preach about today. Then we shift into the cancelled trades era. A random day where I seem to have cancelled all my ETF and index fund orders. I'd like to tell you there was a solid reason behind that, but honestly, I have no idea what I was thinking. Maybe I'd read one too many community threads about diversification and panicked. On to the next batch of trades, and clearly my patriotism had kicked in. I'd bought some of the best of British, and then instantly sold Rolls Royce for a 1p loss. Evidently, at this point I was not built for volatility. A 0.01% drop, and I was running for the hills. Then I see names like Phoenix, Ares Capital. Not sure what I thought they were at the time, they probably just sounded cool. CrowdStrike, Qualcomm, Micron, all sold for small losses. Super Microcomputer, Broadcom, same story. In what I can only assume was full-blown panic mode. But the sun rises at dawn, and yes, here comes my early dividend investor era. I clearly read one article about dividend stocks and decided that was my calling. Suddenly, I'm buying Frontline, a bunch of high-yield companies, and every ETF under the sun. 2 FTSE All-World funds, multiple S&P 500 trackers. I even convinced myself it made sense because one of the All-World funds was accumulating and one was distributing. It didn't. They basically tracked the same thing. I was diversifying my confusion, not my portfolio. And there it is, my unicorn. The one I'd forgotten about. Trump Media. Honestly, I don't even know why. But hey, at that time, it was technically the only stock I'd made money on. So congratulations to me, I guess. Let's just move on, because that one still makes me itch. But just when you think I can't go more rogue, I decided to go full day trader. Buying and selling Novo Nordisk for a small profit like I'm some kind of pro. 2 wins in a row. I'm on a roll, right? But just when you think I can't go more rogue, I decided to go full day trader. Buying and selling Novo Nordisk for a small profit like I'm some kind of pro. 2 wins in a row. I'm on a roll, right? Then comes Laird Superfood. I hold that one for a bit, probably thinking I'd found the next big trend. But the real highlight here is my sudden obsession with ETFs. Buying every index fund I could find, even though many of them overlapped completely. And of course, I bought the big 7 stocks again. The same ones that are heavily weighted inside those ETFs. It's like I was trying to diversify by duplication. That's a thing, right? But don't worry, I sold Deliveroo and led Superfood shortly after. For losses, obviously. At this point, I think it's really important to note, we're only 9 days into my investment journey. 9 days. And I'd already made more trades than some people do in a year. I wanted to review my first 6 weeks of trades, but honestly, I'm not sure how much more of this I can emotionally handle. Fortunately, after about 2 weeks, the madness did start to slow down. The trades became less frequent, although the flip-flopping trend continued. Another small loss on UK oil and gas, a few more ETF buys and sells, possibly due to pie rebalances, but who knows. The good news is that by week 6, I'd stopped trading daily, and I think we can call that progress at this point. So, 6 weeks in, a lot of trades, a lot of mistakes, and a lot of lessons. Looking back, it's honestly hilarious how little I understood, but every investor starts somewhere. And it's easy to see how my portfolio value dropped by 15% in those first 6 weeks. It wasn't because any of those assets were a bad choice. Well, maybe a few were. It was because I lacked patience. I was looking for quick gains, but instead suffered quick losses. Once I accepted I'd made mistakes, things started to click. I learned that investing isn't about chasing the hottest stock. It's a lot like life. You just need to build healthy, consistent habits. And if you can't explain why you bought something in one sentence, you probably shouldn't own it. It's why I started simplifying, built the EI growth pie, added some focus on dividend stocks, and actually read company reports before buying their stock. Most importantly though, patience always wins. Even small, regular investments add up over time. Just do the math. For anyone new to investing watching this, don't be embarrassed about early mistakes. We all make them. The goal isn't perfection, it's progress. Start small, be consistent, focus on learning instead of guessing. You don't need to be rich to invest, but you do need to be open. Remember, a mind is like a parachute. It doesn't work if it's not open. So that's the embarrassing truth about my first investments. And honestly, I'm glad I made those mistakes early. They're the reason I invest the way I do today. If you enjoyed this video, give it a like and check out my dividend portfolio updates to see how far I've come. Feel free to subscribe for future realistic investing content, and remember, investing doesn't have to be complicated. Keep it simple, keep it realistic, and keep it effortless.